The narration is written like this: being goods purchased from Rajan. Amount is not written in narration. So the narration is being goods purchased from Rajan. So this is called journal entry. Now afterwards we are going to see the classification of goods account. We will take one more examples. Just now we have seen goods account. Why? Because you should understand whether coming in or going out. Now we will see in practice how the goods account is classified for convenience. Purchases account, sales account, purchase return, and sales return account. Why this classification is required? This classification is required because there are always n number of transactions with goods. When you say business, you always purchase goods, sell goods, everything related to goods, you have to carry out the transactions. Now suppose you want to know what are the purchases made. You will not able to locate if you are passing entries with goods account. So when you say whenever goods are purchased, if you enter under purchases account, then it will be easy to know purchases made during a month, during 6 months, during year, etc. Sales account. When the goods are sold, they are called sales account. Why? You will come to know easily what are the sales made during the month, during year, during 6 months, etc. Now these are the 4 accounts which got repeated in goods. Whenever after purchases, due to various reasons, maybe the goods are not as per quantity, as per quality, defective goods, for various reasons, you return goods, they are called purchase return. Then same way, when you have sold goods and the customer returns goods, they are called sales return. So there are various reasons that why the customer returns goods. It may not be as per quality, quantity, it may not be as per requirement. So all these are briefly described under goods account, and henceforth we will use these 4 accounts while passing journal entries. Now we will take one more example. Sold goods to Radha for rupees 8 lakh. Sold goods to Radha for rupees 8 lakh. Step 1. Find out 2 accounts involved. So here again if you see 2 accounts involved are goods and Radha. But as the goods are sold, instead of goods we will use sales account. So first account we will write Radha and sales account. Now here instead of goods account we will use sales account, but hidden account is goods account, so it is a real account. Step 2. Classify the accounts. So Radha's account is a personal account and sales account is a real account. Next step, apply golden rules. The rule of personal account is debit the receiver, credit the giver. Now when you have sold goods to Radha, Radha is receiver of goods. So her account will be debited. Radha is receiver. Business has sold goods to Radha. Then sales account. Actually it is a goods account. Goods are going out of business. The rule is debit what comes in, credit what goes out. Goods are going out. So goods account or sales account will be credited. So the entry will be Radha's account debit to sales account. The amount is rupees 8 lakh. As per principles of double entry bookkeeping, one account is debited and the other account is credited by the same amount. So the amount of debit and credit is same. So these are the steps which are followed to pass journal entries. Next. Paid for office expenses rupees 25,000. Step 1. Find out two accounts involved in the transaction. Now the two accounts involved for. Now paid for, here cash account is the hidden account. It is never mentioned that paid for office expenses in cash. It is implied when you pay something, you pay cash. So what are the two accounts involved? Office expenses account and cash account. Every business transaction involves two accounts, and step 1 you have to find out those two accounts. Now office expenses account. Next step, find out, classify the account. Now we have seen personal account, real account. So these two accounts are not, it is a fictitious account of expenses. So it is nominal account. And as we have already seen, cash account, goods account, these are real account. Step 3, apply the golden rule. So nominal account, the rule is debit expenses and losses, credit incomes and gains. This is expense of the business, so you have to debit. Cash is going out, so you have to credit. So right here, expenses going out. Cash is going out of business. Expenses account debit and cash account will be credited. So what will be the journal entry? Office expenses account debit. Office expenses account debit 25,000 to cash account 25,000, being office expenses paid. Now here we have passed entry for office expenses. All types of expenses which are paid, you have to pass the same entry. So all types of office expenses, any types of expenses, the entry is office expenses account debit, or any type of expenses account debit to cash account. Sometimes the expenses are paid by check. There you have to take bank account. So on similar lines, all expenses entries will be done. Received commission rupees 86,000. Now for business, it is very common. The business has to pay expenses and the business has to receive income. Now now if you observe here, commission is income because the business has received commission. Now again, cash account is implied. It will not be mentioned in the transaction. Whenever expense is paid or income is received, cash account is implied. So what are the two accounts involved? Cash account, commission account. Step 2, classify the accounts. Cash account is real account and commission account is nominal account. It is not a person, it is not an asset, it is a fictitious account. It is called nominal account. Step 3, apply golden rule. For real account, the golden rule is debit what comes in, credit what goes out. The business has received commission. It means cash is coming in. So it is debited. For nominal account, the golden rule is debit all expenses losses, credit all incomes and gains. Commission is income, it is credited. So the entry is cash account debit to commission account. 86,000. Same amount on debit side and credit side. Received commission. The business has received commission. Now here we have seen how the business has received commission. Any type of income the business receives, the same entry is there. Cash account to that income account. Interest received, rent received,